All right, welcome back inside our proactive newsroom. And joining me now is Jane Edmondson. She is the head of thematic strategies at Vetify. And Jane, it's good to have you back again. How are you?
Great. Thanks for having me, Steve.
Yeah, excited to have you along. Lots of things going on in the world as far as defense is concerned. We'll talk about a lot of it in just a couple of minutes. But I understand that we also have a few anniversaries to celebrate in regard to the NATO Future of Defense ETF.
We do. We just marked our 1 year anniversary of NATO, the NATO Future of Defense UCITS ETF, which over the last year has amassed over 400 million in assets under management. And it's been a strong performer for investors. So it's an exciting milestone. And then, literally, as we speak, the NATO summit is occurring in Washington, D.C., and that marks the 75th anniversary of NATO. So a couple of exciting anniversaries to celebrate.
Absolutely. And I'm just wondering just about the ETF itself. Maybe you could sort of talk about some of the themes that have really made it such a big success.
Yeah, some of the elements that have been in place, even prior to the Russian invasion of Ukraine, there was the 2% of GDP target that needed to be met by the end of this year. And then beyond that, certainly our defense capabilities were really behind the times, desperately in need of an upgrade with new technologies now available, things like AI and robotics and drones and unmanned vehicles. So all those things had yet to be implemented. And then cyber defense is now becoming an important component of defense as well, with cyberspace becoming a new military domain. So over the last year, a lot of progress has been made. And it's kind of amazing. According to the latest statistics released by NATO this June, 23 of the 32 NATO member countries now are hitting that 2% target, which is a really important milestone because back in 2021, only 6 countries were meeting those spending goals. So there's been a lot of spending that's occurred since the Russian invasion of Ukraine and is continue to be supported going forward. Most notably, Germany now is hitting the 2% target, spending more money since the end of the Cold War. And it's really a huge achievement after so many years of underinvestment. And now countries are working together collaboratively, targeting purchases locally in Europe. So the story really has changed, and it's really aligned with our investment theme.
Yeah. Obviously, there's some uncertain political environments around the world right now. A lot of people tuning in to see, not necessarily about President Biden talking about NATO, but more President Biden talking in general. So there's a lot of things that are going on in play right now. I'm just wondering, has that been had a major effect on the NATO spending story?
Yeah, I think so. I think certainly the uncertainty about the US election has caused NATO's European members to kind of get their act together and pay their fair share. So, now, as I mentioned, 70% of the NATO member countries are at that 2% spending target. And they really are not as dependent as they once were on the United States. Poland is now above 4% of GDP. Countries like Estonia, Latvia, and Greece are all above 3% of GDP target. So even though the US spends the most in terms of absolute dollars, the greatest acceleration of spending is occurring in Europe, and that's a trend that our ETF is capturing.
And who's lagging behind there, Jane?
Well, not to call anyone out, but there are a few countries that aren't at that target. And I'm sure that's going to be a topic of conversation at the NATO summit. Countries like Italy, Belgium, and Canada are not at the 2% target yet. And one of the interesting outcomes, I think, of the NATO summit is they're expecting to increase that 2% target to a higher number. It could be as much as 4% of GDP. So there's definitely more spending to come.
Yeah. So obviously, when you hear that news, there are a lot of companies that really rely on that type of spending. So I'm wondering what kind of companies would you be looking at to be the biggest beneficiaries of something like that?
Yeah, so I mentioned Germany, and one of the
Yeah.
companies in Germany is Rheinmetall. They recently landed their largest contract in the company's history of 3.5 billion euros to build military trucks. New member Sweden. Saab is a company there, a Swedish company there that stands to benefit. They in last March got a big contract for a man-portable multi-role weapon system that was worth 60 million euro. And Nokia in Finland, another new member, stands to benefit in the area of cyber defense and communication. So with an 18% increase in NATO spending, last year. There are many other European defense companies that stand to benefit over the next few decades, especially if we get to a number as high as that 4% of GDP target. And,
Mhm.
after years of underinvestment, countries are starting to work together, and the spending is being directed locally and under joint procurement. So I guess in summary, the NATO Future Defense UCITS ETF is a great way for investors to get defense exposure that's also aligned with the growth in NATO spending, and then also is aligned with NATO's values as well.
Yeah, it'd be very interesting to see how it all rolls out for sure. Jane, thanks so much. Great to get an update on what's going on. And I guess you can say happy birthday as well.
Thank you, Steve. It was great talking to
All right.
you.
Yeah, you as well. Jane Edmondson, she is the head of thematic strategy at VettaFi.